So we mentioned we had $48 million of investor capital, limited partner capital that invested with us in 2024. Are all of those checks $2, $3, $4, $5 million? Nope. Some of them are 50,000. Some of them are 100,000. Some are $1 million. But the point is giving folks more access that don't have millions and millions to buy commercial real estate, enjoy the economies of scale and the risk reduction that can come with having larger property and risks spread out over more apartment units.
Welcome to the Secrets to Abundant Living podcast. Your guide on this journey is Amy Sylvis. If you're ready for the secrets to an abundant life, hit that subscribe button now, and let's get started.
Secrets to Abundant Living podcast community, hello, and welcome to 2025, our first solo episode of 2025. Can you believe it? Wow, time really has gone by fast. I heard someone say the other day that now in 2025, we're just as close to 2050 as we are to the year 2000. And that really made my brain do some somersaults. Wow. That is quite the perspective. But yes, what a blessing it is to be here with you. For those who don't know me, my name is Amy Sylvis. I am the founder and principal of Sylvis Capital. And we connect investors to hands-off real estate investing opportunities. We've got some great content for you today. So I'm really excited you're joining us. And yes, how was everyone's New Year's? How were your holidays? If you celebrate Christmas, if you celebrate Hanukkah, if you celebrate Kwanzaa, I hope you all had an amazing holiday season. For my family and I, we stayed local. But local for us means a lot of fun because we live in Los Angeles and we have access to the Rose Parade and the Rose Bowl. If you haven't been to the Rose Parade, do yourself a favor. It is nothing like it is on TV. To see it up close, see these floats up close and personal, just stunning. Truly, nothing like it anywhere else on this planet. And of course, to see the bands and the horses, and there's just so much that has such a long history of, over 130 years out in Pasadena, California. And then, of course, there's the Rose Bowl, the granddaddy of them all. Even though, sadly, my USC Trojans didn't do all that great this year, we went to the Vegas Bowl. We beat the Aggies, which is exciting. Nice to end the season on a high note. But my husband, my dad, and I went to see Ohio State play the undefeated Oregon Ducks at the Rose Bowl. What a game. If you like college football, you've got to make your way out to the Rose Bowl if you've never been. It's an interesting stadium, right? It was plunked right in the middle of a residential area. It's not necessarily that great to get in and out, but gosh, you can feel the history. You really can. And by history, I mean I think 25 different Rose Bowl game wins that my USC Trojans have had there. It's been a minute. We haven't won anything since 2017 there, but a great college football history and the granddaddy of them all. Well, let's get into it. Before we get started, just a reminder, creating this podcast is amazing and so much fun and enjoyable, but it's also a labor of love. It takes time, it takes finances. So we would love for you to support us by giving us a rating and a review on your platform of choice. So whether it's YouTube, subscribe, give us a review, Spotify, subscribe, give us a rating. Apple Podcasts, please give us a rating and review. We would be so very grateful. Share this with someone. We're continuing to grow by leaps and bounds, which is amazing. We want to continue to add value, and we can only do that if we grow. So thanks in advance for that. All right. So last podcast, we talked about celebrating our wins, the gap in the gain, celebrating how far we've come before we set our goals. And I was looking back, and I just want to share a little bit about the Sylvis Capital 2024 season, as it were, or year. And I don't say this to brag. I say this because a lot of you know my history. You know that I struggled with health challenges of cystic fibrosis for decades. You know that I was on Social Security disability because I was too sick to work. So I'm excited to share these statistics, again, not to pat myself on the back, but to show you what is possible, even if you were not given a head start in life, even if you felt like you started late. I'm 43 years old. I'll be 44 this summer. It's not like I'm a spring chicken, but wow, I'm excited to share this with you. So we started our podcast almost a year ago, not quite. So that was started in 2024. I spoke at several conferences, both about real estate and about mindset. And the highlight was really the cash flow conference that I was flown to in Kansas City and spoke on stage, which was amazing. We closed on 98,300,000 worth of apartment buildings in Dallas and Tulsa. So that was in 2024 alone, 98.3 million. And that totals 835 apartment units. So those are 835 families that we have the blessing to be able to care for, steward, provide clean, safe housing. And in the purchase of the $98.3 million in apartments, we had $48.2 million in investor capital that joined us in these deals. So we are so excited that so many investors decided to invest alongside us in these incredible opportunities. And, we talk a lot about this podcast that wealth isn't the destination, but hands-off income, like we can generate in real estate, can be a great vehicle to having the abundance of doing what we want, when we want, where we want, with whom we want, for however long we want. So some celebrations there. I know a bunch of our investors listen to the podcast. So congratulations to you. And we're really excited to make these investments perform. So as we look forward to 2025, and I look forward to my own goals, I really want to ask you all, how is this vehicle to abundance working for you? How is your hands-off income going? If that's something that's a goal for you, would love to check in at this checkpoint and really understand the progress that you've made towards your goal and what you're planning for 2025. I believe very strongly, we talked about this. If we want to get a certain set of results, there's no bigger hack than finding people who are already where we want to be, right? We don't have to reinvent the wheel. There are so many resources and people and organizations and books and podcasts and just all of these things that we can turn to that have already charted the path for us, and we don't have to do it on our own. So knowing this, I'd love to take a look at this organization called Tiger 21. You've heard me talk about them before, but they've recently updated their statistics, and I want to share them with you because, again, success leaves clues. And if your goal is to be able to have these freedoms of being able to have more control over your time, spend time with family, travel, enjoy your hobbies, give back, contribute to the community, all of the great things we talk about on this podcast, focusing on your wealth, focusing on your financial independence can be that vehicle that gets you there. So who is Tiger 21? As a refresher, they're a global community of ultra high net worth entrepreneurs, investors, and executives. Yeah, they're big time. And the great news is they share with us the categories that they invest in. And this probably won't surprise you, but they're not only invested in just stocks and mutual funds and their primary residence, right? That is more of a middle class thing. The wealthy invest differently. So if we're looking to achieve what they have, it might behoove us to take a look at and really understand what they're invested in. So I'm going to share my screen. If you're on YouTube, if you're on Spotify, you'll be able to see this. Okay, we'll describe this for those who aren't able to see it. But this is essentially the member asset allocation from Q1 of 23 to Q3 of 24. And what do we see? We see public equities allocated at 23%. So these are your stocks and your mutual funds that are comprised of stocks. And then we see private equity at 27%. So what is private equity? These are People that invest in companies that are not publicly traded on the stock market. So like stocks, but private. But the idea still is investing in companies. And then real estate at 27%. Now, I will almost guarantee you that this real estate is not just their owner-occupied home, right? These are other real estate investments that these folks invest in. And then we've got fixed income at 8%. So those are typically bonds. So this is the Tiger 21 asset allocation. And again, I share this because success leaves clues. And if we are trying to grow our wealth, grow our hands-off income, this is something we can model ourselves after. This is not investment advice. I have nothing to do with Tiger 21. Like you, I just pay attention to what the wealthy do because I don't need to reinvent the wheel. They've already laid out the map for us. Have you ever thought about having multiple streams of income? Instead of relying on just one stream of income where you're trading your time for money, how would you like to free up more of your time and live a more abundant life? As a listener of the show, you're invited to attend one of our upcoming trainings where I'll give you an inside look into how you can add passive income and get all the other perks of recession-resistant real estate investing without the headaches of being a landlord. We'll also be sharing some hidden mistakes to avoid and the criteria I personally look for when evaluating potential investment opportunities. To reserve your seat for free, go to sylviscapital.com/webinar. Again, that special link to reserve your seat for free is sylviscapital.com/webinar. I look forward to seeing you on the training. And now back to the show. So you may be saying to yourself, and this is what I said to myself years ago before I knew better, hey, real estate, I don't have millions and millions of dollars to invest in real estate like the wealthy do. I simply don't have that kind of money. Maybe one day, but I certainly don't have it at the moment. So maybe the only thing I can invest in terms of real estate is my owner-occupied home or a duplex or a quadplex or a fourplex, depending upon where you live. I'm here to dispel that rumor because thank goodness the Jobs Act, something that was passed more than 12, 13 years ago, was passed that gave the average American more access to the wealth generating vehicles of the rich, like commercial real estate. So what does that mean? You've probably heard the term real estate syndication. This is how the masses can have bigger access, greater access, more access to the wealth building tools of the rich, like commercial real estate. Okay, so what is a real estate syndication? And again, this is just for educational purposes only. You may have heard of this. But again, if you're looking to mimic the asset allocation, the portfolio of the wealthy, real estate, as you saw, was part of that. And I want you to understand how you might have access to a real estate investment for $50,000, $100,000, rather than millions and millions and millions of dollars that was required in the past. So a real estate syndication is pooling capital together using several people's resources to buy commercial real estate, office buildings, retail strip malls, flex industrial, or apartment buildings. So when I talked earlier about the amount of real estate I purchased and the investors that have invested alongside me, they're investing in my real estate syndication. Now, I'm not telling you to do this. I'm not trying to get you to invest with me, but I want you to have exposure and understand this wealth building vehicle that used to just be available to the rich, but is now for some at a more accessible price. So how does this all work? People like me who have experience and do this full time find markets that are growing throughout the United States, get access to buying properties that are not available to the general public, and then purchase them and put them in an LLC. And then our investors have the opportunity to purchase shares of the LLC. So they're part owners. But in a real estate syndication structure, it's important to understand that there are general partners and limited partners. The limited partners are the investors. They do none of the work. They don't find the property. They don't operate the property. They don't take the midnight calls about a leaky toilet. They don't deal with the termites. They don't deal with all the drama that is tenant management. That's what someone like me does. I am the general partner. I am the active person in the deal. While my investors own the majority of the syndication, they own the majority of the LLC, they don't have to deal with the work. Their only job is to find the property that they want to invest in that fits their goals and then collect the quarterly distributions that come from myself as the general partner and my business partner operating the projects. So does that make sense? Instead of going out and let's say you live in California like I do, I hear these horror stories constantly of California residents know the value of investing in real estate. They get it. They don't want to just be in stocks and bonds. They want to own real estate of their own and use that as a vehicle to generate hands-off income to have the abundance that they want in their life. Okay, great. But California, there's rent control. Sometimes the rent control doesn't keep up with the increase in expenses like utilities, like repairs and maintenance. Yet the government's telling you, hey, sorry, you can only raise your rent a certain amount, or it takes forever to evict a non-paying tenant. I know a gentleman who inherited a home in California from his dearly departed mother. He didn't want to sell it. He decided to get a renter. The renter trashed the place. It took 12 months to evict the non-paying tenant. He says he will never invest in California again. I don't blame him. So if you're a California resident, what are you going to do? Well, one of your options is to invest in a real estate syndication and invest alongside people who have done this for years and years, who have the expertise, who do this full time, who have the ability to operate the property in the best locations in the United States, where you don't have to deal with rent control. You don't have to deal with the eviction courts taking 12 months and tenants, unfortunately, gaming the system. That just doesn't have to be the case. But if you do it on your own, maybe you want to go invest in another state and you live in California, that can be a tough thing too, to go it alone. Not as big of economies of scale as you might get in commercial real estate. How are you going to choose a property manager? How are you going to check up on the property? That can be quite cumbersome. So a real estate syndication allows you to get the benefits of investing in commercial real estate without the millions and millions of dollars. It can be a very powerful structure. It's not for everybody. Let me be very clear. The important thing to evaluate is, what are your goals? What is your risk tolerance? And what's your time horizon? For some people, investing in a real estate syndication doesn't quite match up with what they want, and that's perfectly fine. But for some, it is an answer to being able to get exposure to some of the best kept wealth secrets of the wealthy, which is commercial real estate, and having diversification. So not just being in paper assets like stocks, bonds, and mutual funds, and then not creating another job for themselves while they can rely on a general partner such as myself, who is actively managing the deal. They just collect the checks on a quarterly basis. Now, fair and balanced, there are some downsides to real estate syndications as well. So let's talk about those, because again, nothing is perfect. Stocks aren't perfect. Bonds aren't perfect. Gold and silver isn't perfect. Private equity isn't perfect. None of this is perfect. So let's be fully transparent so you can make the best decision for yourself possible. If you're a control freak, real estate syndication might not be for you, because by definition, as a passive investor, as a limited partner, you do not make any decisions on the property whatsoever. It doesn't mean your general partner can't consult you, can't get your input of the limited partners. But at the end of the day, the general partner is tasked with being the active person doing the day-to-day operations and making the decisions. Hey, if you do your due diligence, you build a great relationship, you get to know the general partner, that might not bother you. But for some people, they want full control no matter what, all the time. The other thing too, real estate syndications can tend to have a 3 to 5 year time horizon. For some people, that doesn't work. They maybe want to flip a house, get in, get out, spend a year, don't want to have their capital tied up for longer than 12 months. That's not going to be a good fit for real estate syndication. Real estate syndication by nature typically is sold within 3 to 5 years. So if you need that capital before then, probably not a good idea for you. So it's important to think through and understand, like I said, what are your goals? What's your risk tolerance? What's your time horizon? Every investment has a benefit and a risk. Just have to align them and see what you're looking for and what aligns with that. So we mentioned we had $48 million of investor capital, limited partner capital that invested with us in 2024. Are all of those checks $2, $3, $4, $5 million? Nope. Some of them are 50,000. Some of them are 100,000. Some are $1 million. But the point is, this is more of I almost want to say democratization and giving folks more access that don't have millions and millions to buy commercial real estate, enjoy the economies of scale and the risk reduction that can come with having larger property and risks spread out over more apartment units. How's that sound? I think it's fantastic. I love to talk about it, but again, not investment advice, really here just to help you think through what's your hands-off income vehicle to be able to have the abundance that you want in your life in 2025 and beyond. Is it that you're going to dig deeper into creating an online course that people can buy at their leisure and you just get those checks that come in there? Are you going to double down or invest in bonds and stocks that give you dividends or a coupon? And that's the hands-off income that you're going to have. Truly, keep researching. I encourage you to figure out what aligns with your time horizon, your risk tolerance, and your goals. Maybe it's real estate syndication, maybe it's not. But the important part is, and I posted about this on LinkedIn today, is you need to be true to yourself. Be true to your authentic self and don't just follow what society tells you, what your family tells you, what anyone around you tells you. You really have to check in with yourself because at the end of the day, you're responsible for your happiness, your feeling of abundance, and your financial independence now and in the future. Well, I am so excited to spend 2025 with you all. We have some incredible guests coming up on the podcast. Obviously, we're going to keep talking financial topics for our solo episodes, and I'm just so grateful. Make sure you are sharing this with someone who you think could find this valuable. And thank you again for all of your support. It means the world. And we will talk to you soon on our next episode. Happy 2025, everyone. Talk to you soon. Bye for now.
Thank you for joining us on another episode of the Secrets to Abundant Living podcast. We hope you found inspiration and valuable insights that will empower you on your journey towards abundance. If you enjoyed today's episode, don't forget to subscribe, rate, and leave a review. Your feedback means the world to us, and it helps others discover the secrets to an abundant life too. Stay connected with us on LinkedIn, Amy Sylvis. Keep striving for your goals, nurturing your relationships, and embracing the adventure that is life. Until next time, we wish you an abundantly fulfilling day.